I'm Jen Ward with Family Finance Success. Welcome back. At Family Finance Success, it is my goal to provide everyone with financial literacy and to empower families to learn, grow, and make godly change. Today we're going to be talking about future financial planning. And you probably want to hit the stop button right now. Take a seat, get a cup of coffee, and prepare yourself mentally for this talk. Because future financial planning is scary. A lot of people avoid this until the last minute, and some people avoid it forever. I won't lie. Some people just avoid it forever, thinking that they'll do it later, and later keeps being pushed off until tomorrow, and then tomorrow keeps putting off to next week and next month and next year, and they're 65 years old and they're like, wow, where did that time go? And future financial planning doesn't mean just retirement. It means a lot of different things. So I wanted to just give you the very basic steps of future financial planning. And if you liked this video, I would highly encourage you to go to the blog post that is in the description below and get a much bigger view of what I am talking about. I think if I were to put all of this in a video, you would get really bored and not listen to it. So I don't want to do that. I want you to be encouraged by this video and think these are the steps that I need to take. And then if you really are thinking I need to do this next step, hop over to the blog post and see the recommendations that I have for you on where to go with that next step. And if you have any questions or comments, post them in the comments below because I would be more than happy to give you any guidance that I possibly can. So, number one, the very first thing that we need to do for our future planning is twofold in most people's cases. Number one is to create a savings, and number two is to get out of debt. Now, I consider this future financial planning because for our future security, we need to make sure that we have no debt eventually, and we also need to make sure that we have a savings. And I don't mean just that $1,000 emergency savings that is so popular. I am talking about a 3 to 6 months, and I really would highly encourage the 6 months worth of living expenses saved. And this is something that you never touch. This is something you put in a savings account in, Africa. Maybe not Africa, but in a savings account at a bank where maybe it gets some interest on it, but it's easily accessible if for some reason you were to lose your job or there were to be a medical emergency and you needed to stop working or your spouse needed to stop working. That's the only time you would touch this 6 month savings. It would not be for emergencies like your house breaking or your car breaking. This is solely to cover expenses if something were to happen to your job. And that is really, really big. And then, if nothing ever happens to your job, you can roll that over into your retirement savings. So have a plan for it if nothing ever happens, but having that 6 months worth of expenses saved is just this really cushiony blanket. And I can't wait to get there personally. That is a step that I can't wait till we get to work on. But you really need to have that. And the other thing that goes along with kind of everyone's current future financial planning is to get out of debt. And you know what? There are so many ways to do that, but it needs to be that very first step. Get a savings and go ahead and take care of your debt. Getting all consumer debt, all student loan debt, any type of bank secured or unsecured loans paid off, any type of business debt even. Getting all of that gone away so that the only thing you really have is a mortgage. And then I think you will quickly find that you can go ahead and pay that off. Now, the second step for future financial planning is thinking about your children. Do you want to have a savings account for them for college? Do you want to have a savings account for them, period? And that is something I include in future financial planning. We have a savings account for both of our boys, and we are looking at opening a college fund for both of our boys as well. Now, I'm not going to suggest any types of funds. You can do a quick Google search. There are different ones per state that are great. They're tax deferred or tax free, and those are great options. But I think that if this is a goal that you have, you need to make sure that you yourself are set up financially, where you are very limited, to have very limited debt, and you are saving. Then you hop over to that. And just a reality for you, most college tuition, if they're even in state, is about $22,000. So if you're planning to pay for college for your child, for one child for 4 years, you need to make sure that you have that money. And that may not be a goal for everyone, but it is something you have to think about because that is future planning. The third thing that you need to take a look at is your financial future retirement. I believe everyone should be taking advantage of a 401k that their employer matches. So if you have a 401k and your employer is going to match you 3%, even if you're not debt-free, I would highly recommend that you be putting that 3% in there, because really that's free money for you. And if it's 10% and you think 10% is just too much out of your paycheck, then do 5%. But don't not take advantage of that. I know there are a lot of people out there who say you should put your retirement hold to get out of debt. I don't necessarily agree with that. And I think that you have to have a big picture for this type of thing. The big picture is that you should not be relying on Social Security, right? You don't know when it's going to be pulled. Nobody knows. It may never be pulled. But I personally am not comfortable relying on that, especially when you actually know how much you're going to get. It's not that much. You don't want to limit yourself to just getting paid once a month as when you're retired, and that's that. So, ideally we wouldn't have any debt and we could put all kinds of money towards retirement. But I think the middle ground there is putting some money towards debt and savings currently, and then putting some money towards your retirement. And I think the best option for that is if your employer is matching, just put what they are matching. And that's what we currently do while we're paying off our debt. Now, the other thing that goes into that retirement, and I get asked this, and I'm not even a retirement specialist. I don't give advice too much on retirement as to where you should go with it. But they always ask, is there a number that we should have? No, guys, I don't think that there's a magic number. I don't think there's a magic age. I don't think there's a magic anything with retirement. I think the only magic is putting money where it needs to go. And that usually is like a 401k, an IRA, typically a Roth IRA. And then if you want to invest, go somewhere else and talk to them. But the thing that people miss is that they think that, well, when I retire, things will be easier. And I think that is a misconception a lot of people have. When you retire, you're at an age where most people's health start to decline. And you want to travel and you want to do different things, right? You want to do the things you didn't get to do while you were working. So expenses a lot of the time don't go drastically down. A lot of people have that conception. They're like, you know what? I've got all these expenses now with kids. Now I don't have kids. I got to pay off my mortgage and my debts. And then when I get to retirement, it's going to get easier. Well, a lot of the times there's 3 things that happen. One, you have to cover your own medical costs. And even if you're doing Medicare, you still have to pay. And then you have to cover prescriptions, because a lot of the times you'll have more prescriptions as you get older. And then you have to cover actual medical doctor's appointments and surgeries. So your health can actually be a huge expense that you're not anticipating as you get older. And then another thing that gets wrapped up into all of that is, I think the easy part right there is kind of when your kids leave home and you're still working. I think that's when you can focus a lot more on, you have the most money in your life. That's what I really believe. I think that as you can see yourself getting, and I don't want to say getting rid of your children, but as you get an empty nest, that's when you have probably the most money, because your children aren't relying on you as much unless you're paying for college, and hopefully you already have college saved for, and there's not as many expenses. So I think that that's kind of that, the sweet spot for you financially as you get older. I mean, I've dealt with it with my grandparents. I've dealt with it with a bunch of people in my family. It's not easier as you get older. So you need to be prepared for that. And retirement isn't just, peaches and cream. There's a lot of things that go into it. All right. And then the last thing that I need you to think about, and this is the big scary one. for future financial planning is life insurance and funeral arrangements. And I know, you're like, all right, I'm done with this video. Thanks, Jen. It was entertaining until now. Number one, it's not wise to leave your children with this burden. Number two, if you're single or you're not with anyone right now, it's not wise to leave it to chance, who's going to take care of it when it goes. So what do you need for life insurance? I'm not going to be able to tell you that. Every single person is different. What do I recommend? I'm not even really going to tell you that because I don't know you and your situation personally. I'll tell you what we have. We have 2 whole life insurance policies, and then we have 1 term and then something through my husband's work. And the work policy, I will say, you never know when he's going to lose his job or when he's going to move, so we don't rely on that as much. But we have life insurance. That was something that I was actually gifted a life insurance policy when I was 18 from my grandparents because they were big believers in life insurance. And then we went ahead when I was 19, me and my husband took out 2 life insurance policies because that's when we had our first child. And we did not want to leave our child with that type of burden. Now, I don't think you should be life insurance poor. I don't think that you should have millions of dollars in life insurance. You don't need to leave your child with that type of money. What I do think is that you should have enough to cover any costs that they may need for your funeral arrangements if you don't have that already paid for. And I think that you should leave them with money to, if you have debt, cover your debt. Oh my goodness, you do not want your child to have to deal with that. And then maybe a little money for them if you don't have an estate or anything like that. But again, that's something you have to work out with a life insurance agent, and I just can't tell you. Now, funeral arrangements, you should be thinking about this, especially if you have children. One of the biggest gifts I think my grandparents ever gave us was already having all of this laid out. My in-laws have this all laid out. It's basically you go to the funeral arrangement and say this person has passed away, and they say, okay, here's what they wanted. The cost is already covered. The only thing you may have to do is put the wording inside of a pamphlet or, take care of the legal end of things. That was one of the biggest gifts that anybody has ever done, because at that time you are so emotionally, whoever's taking care of your funeral, they are distraught. It's a very sad time, and they don't want to have to make these hard decisions, especially if there's any doubt in their mind that maybe that's not what the person had wanted. So it's nice to have those things taken care of as early as possible. And now a lot of the times you can go to a funeral home that you think you want to get laid to rest at, and you can go on a payment plan to have that type of thing done. And I am not against that at all. I think that's a wonderful thing that they offer, and I think people should be taking advantage of that more. Now, those are the steps that I would do this in. I would get rid of my debt, I would save, I would look and decide what I want to do for my children for their future, I would go ahead and take care of my retirement, then I would go into having funeral arrangements. Life insurance, if you have children, should be done right around that time that you're thinking about how you want to prepare for your child's college. So if any of that interested you and you want to know more about any of those steps, go to the blog post below and leave any questions you have in the comments. I thank you for watching this video, and I really, really hope that this didn't just turn you completely off about financial planning for the future, because it's a very important step to make sure that you are financially secure. I will talk to you guys next week.